Alright, what is going on, everybody? I've really just been trying to learn more about stocks, more about trading, more about everything, so I can give you guys the best input that I have on any info that I come across. So, with that being said, today I kind of wanted to remake the video I made before about setting up your charts to really help beginners learn a lot more, because I know a lot of people now are kind of getting more in the market, not knowing what they're doing, joining all these discords, doing all this different stuff, but they're not really understanding what they're doing, and I feel like in the long run that's losing a lot of people a lot of money. So as a way to just kind of combat this, help people kind of gain more financial hold on what they're doing when they're trading, I kind of would remake the Thinkorswim video and just really break down exactly what the studies are that I use, what they do, and how they help traders to kind of get more hold of the market and feel more comfortable putting their money into. So I'm just going to kind of break down all of that and show you guys the best methods that I use. One more thing I wanted to add, not all the discords are bad. I made it sound like I was discrediting all discords. There is one discord that I've been in for a while, and they've helped me make a lot of money, and they've helped me learn a ton about the market. A lot of stuff that I've learned, and I just wanted to shout out Atlas Trading with Zach Morris, PJ Matlock, Ripster, Hugh Henney, Mempreet, all those guys. You're doing great shit. Keep it up. You have a lot of educational stuff too, so let's get right into it. Okay, so first thing I would do is open a broker with TD Ameritrade. That's my preferred way to go, and download their Thinkorswim plugin or run-in, whatever you want to call it. And then once you open up Thinkorswim, it should kind of look like this. And then from here, you're going to go to your charts. And then you're going to get something like this. So this is kind of difficult. I guess it would be more like this. So just start off, you can't really do much with this, with the way that's set up. It's difficult. For a lot of people, they're not going to understand really what's going on. And we'll talk about one of the big stocks real quick. NEO has been getting a ton of buzz, so we can play with this one. Everybody knows about NEO. It's a electric vehicle company. A lot of people just bought the stocks, but I did a lot more research into them. They make some pretty sick cars. It's kind of ridiculous what they're making. They got almost like a Jarvis type thing on their dashboard that can pretty much talk to you and connect your car through everything. It is the craziest thing I've ever seen. But just kind of break into it. First thing, just to look at it, get a better idea of what the chart looks like. I would hit the day tab up here, and then you go to 1 day, 1 minute. It gives you a better look of what the stock is doing through that day. Just kind of lets you see. And then from here, you're going to go to studies. And then over here, you're going to click. I use VWAP. That's what I'm doing right now. VWAP. There's other stuff that I can talk about that's kind of more deeper into it, but for beginners, again, VWAP strategy is great. You got the VWAP. We are going to add the simple moving average. Talk about that more in a second. Let's just get the studies in. Exponential moving average. The RSI. And the MACD. So now when you hit apply, it's going to instantly add all of that to your chart. And it's going to look a lot better. So we got all these new things to talk about, all this great stuff showing the stock indicators. So if we go back into studies, you go to simple moving average. I like to change my simple moving average to 180 days. Boom. And then I keep the exponential average at 9, hit apply again, and boom. So you see here, let's zoom in a little bit. All right, so the line at the top, this blue line here, that is your simple moving average on 180 days. And here, this blue line moving there is your exponential moving average. So my simple moving average is charted for 180 days, which means it's going to move a lot slower. As you can tell, it kind of has those monotonous curves going up and down a little bit. And then the EMA moves a lot closer to what the market's actually doing. And that's really cool because you can make references and stuff based off of this. So what I do is when my simple average is moving above the market, I don't trade it. And the EMA kind of gives you just like a better look of what it's doing again, is what I said. And I just like having that there as another indicator because it helps to calculate the price average. So it's giving you a really good understanding of what the market's doing exactly. And when the SMA and EMA cross and the SMA comes under, you can tell that gives usually more of a buy signal. So let me open this up a little bit more. Boom. It's showing more of the uptrend. So you can see here that it's uptrending. SMA crosses, and it starts to go back down. Now, let's talk a little bit more about the RSI. Let me move this over. RSI is called a relative strength index, which shows how much a stock is bought or sold. And that's indicated right here. So as you can see, if it goes under the 30 RSA line, that just shows that the stock is very underbought. And then when it goes above, as you can see right there, over the 70 RSI, that just means a stock is very overbought. So let's see if we can find a good example. Here's one. So this is a good example of a bad day for NEO. So you can see down here it goes under the 30 RSI and it doesn't hold, it keeps going down. Has a little bit of an uptrend, so you can see right here it consolidates with that uptrend and then it just keeps going back down the whole day. It's cold. It's going blue. It just shows that it's really underbought and it's not traded that much during the day. So that's a good indicator that you wouldn't want to trade it. Or a good indicator that you wouldn't want to get in at that point because NEO has hit some crazy highs. So now we want to talk about the MACD. So the MACD is a moving average convergence divergence of a stock. And I use a MACD like a lot of other traders do, and it makes it very simple for a lot of people. I am saying simple, but again, none of this is easy. It takes a lot of time to learn and a lot of dedication, and you're not going to figure all this out in one day. And you're not going to watch this video and be like, oh my God, I know everything about stocks. It's going to take you a while to get everything correct. But you can learn it, and there are ways to make you a lot better trader by following this. So with the MACD, this is my VWAP line. It shows a volume here, and then when it trades underneath like this and it crosses, I think of this as a buy signal. So in these right here, when this blue line, yellow line cross on the MACD, I would constitute that as a buy. And then again, when they cross up here, that's considered a sell signal. Let's see if we can find a better example. So right here, we get the buy signal sitting at 24. It gets all the way up to 31 in the same day. You move over here. We get that cross at, what is that, 30.4. And it drops down to only 28.9, but that's still kind of gives you a better understanding of what I'm trying to say. Now, I understand that I didn't break down the VWAP, so I will talk to you guys about that right now. All right. So I really like the VWAP because it helps you get a good idea of exactly what the graph is doing. So you see right here, the middle bound of the VWAP, it bounces up and down off the stock, and then the upper bound in pink, lower bound in yellow. When the stock goes below the lower bound, I would think of the stock as being cold or not trading it. And when it goes above the upper, it's overbought, or I think of it as untradeable. But there's times of breakouts where the VWAP consolidates or moves up, the upper bound moves up, lower bound moves down. So that shows you either uptrends or downtrends of the stock, and that can break resistance, but we'll talk more about that later. So I usually only trade stocks that are within the VWAP because I think that gives a good kind of like a beginner idea of breaking down all the stocks. See, there's a good example right here. Right here, broke below the lower VWAP and went below, consolidated back up, but it just shows that when it breaks down, it finds the lower lows in the day. Because then you wait till it goes back up, and then you can find it uptrended throughout the entire day. Volume is also a big indicator for all of this. So volume can help you find breakouts. The volume just shows how much the stock is traded for the day. So I don't trade anything under 1 million volume at least, because that just shows that there's not going to be much movement, and I like stocks that move because I like seeing it go. I like making money. So you can see right here, there was a volume increase, boom, 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 and then it hit its high of 35.25. Here's another volume increase, hit the low. Everybody said, oh, that's a buy signal. Boom. Put your money in. Bought all the way up. Got to 33.27. 31.36 to 33.27. So this was just kind of like an easy chart breakdown for you guys. There's a lot more complicated stuff that you can talk about, but as a beginner trader, I suggest you set up your charts like this, kind of look at everything, and it'll help you get a much, much better idea of what you're trying to do. So thank you guys so much for watching. I'll keep making more videos, kind of explaining stuff, and I'll keep talking about upcoming stocks that I think are going to do great. For example, CFII. I'll talk about it more in later videos. But thank you guys so much for watching. Make sure to subscribe and make sure to join Atlas. See you guys.